Welcome back, everybody. Wild day today. We have a lot to cover. We're going to jump right into it. So we can see the 42.8775. We drop our pin here, 43.2875. Still one of the core levels that we need to see. We can see the pattern right here, the bear little pendant, the breakdown, and then we're unable to get there. We're going to get to that. We also should mark here, coming straight across that 4,300. And candidly, we're unable to close above it. And we need to be aware of that. Now, we've got some economic data tomorrow, and that could be something to do with it. People are afraid to put in there and get involved. And I'm going to zoom in on this for a second before we drop down, because I think this is a really important distinction that people need to pay attention to. Number one, see the wicks? See how we're getting Wick City here? Wicks are what? Wicks are price rejection. So we are not closing at the low end of these bars. We are closing at the high end of these bars. That denotes a pattern that I would pay attention to. The other thing that I would denote is, see where we are opening and closing in this level here? This bar is filling in that wick. That's important to understand. So what it means is that this was completely rejected yesterday, that wick was. Let's zoom in here a little bit more. I get asked a lot, do I get into this kind of detail? The answer is yes. See how you're filling in, even though it's the open and close, you're filling in a portion of this. This is something that is a rejection. And this is saying, no, we're going to fill this in. So we're filling this in a little bit. And you can see that even in this, where you had trading, we couldn't even get anybody to stay in that area. Well, that's a bullish sign. It might not look like the most bullish sign in the world, and candidly, it's not the most bullish sign, and some people are going to comment below that I'm looking for things, and maybe you're right. I do look at this, and it is important to me. I look for anything that can give me an edge. So I wanted to point that out. I think it's an important distinction. There's some other things that are somewhat important before we drill into the hourly and go into different levels and get through some of these stocks that look like they're going to absolutely rip, or others that look like they're going to absolutely fall apart. Bunch of names to go through, but we're just going to go through the basics here. We can see where the 200 is. Look at the rate of change, how the rate of change is starting to go higher. We want that above the zero line as soon as possible. And you still have that little DTL here. You're trying to break it, but you're just not really there yet. Could be tomorrow. We have a lot of economic data coming out, as we're aware. We're going to address that in a moment. Now, for our sake, I'm just going to remove those lines, and we can see the MACD here. We can see that we're still pointing down, but we're starting to slow our roll here, and I think that's a really important distinction. In other words, what's starting to happen in here is we're starting to go sideways, which I want to see. Let's get that arrow back. There you go. And when this happens, there's one really easy thing to do. You just drill into a smaller time frame. In this case, we're going to look at the 4-hour. And all we're doing for this is just looking at that 4-hour. You can always tell what chart I'm looking at because it's denoted up here and the symbol's over here and the date is always there so that you have a reference. But if you take a look here, you're starting to see that we're trying to make a higher high even though we're here. So that kind of bodes well that we could be trending higher. We're still not over that zero line. You really have to drop to the hourly to find us above that zero line. You can see up, down, and then the retest here. And then we can see how the RSI is starting to point up a little bit. So we are trying to hold in here. Now, tomorrow, non-farm payrolls. This is going to be a big one. Everyone was looking at ADP non-farm payrolls and suggesting that that is going to affect BLS non-farm payrolls. The issue with that is ADP, which was Wednesday and came in very bullish for equity markets, only looks at their data, doesn't look at the full data. An ADP, average client, is about 30 employees. So it's more of smaller businesses. So this can be bigger or smaller. Now, in general, historically, it's becoming even more bullish than ADP. That's what historically has been happening, and that could happen tomorrow, but we need to watch this big time. This is pretty much how our day is going to go, predicated upon this. And if it's decent, I care about average hourly earnings, but I really want to watch this. This is what everyone's going to be focused on. This comes in light, meaning lower, then we can watch the market rip. And that's going to be the most important thing for us to watch tomorrow. That could be our driver for tomorrow, and that could be the driver to get us over core levels. Now, one of the things I've been pointing out here is just this divergence that's sitting to this level, and you should be able to see that where you're actually in a position here where you are basically flat to down a little bit, but we're not doing that on the RSI on the daily, and that's holding there. If you go take a look at the McClellan oscillator, and for time's sake, we're not going to do it. I'll cover it this Saturday, so make sure you subscribe. And I do appreciate all the comments about how these videos are playing out and how they're linked together. I also appreciate you sharing. Make sure to say thank you for that, because it means that I don't have to run ads in the middle of these for the algorithm. So if you take a look at this and you see how this is going, you can see very clearly that you have a divergence there. We're going to have to see how this plays out. We really don't know yet. I'm getting some indication that this looks pretty solid, to be candid, that I think it looks solid. And if you start really drilling into the names, see how we're going sideways here and holding. So there's a lot here where we're just simply not breaking down. Now, it doesn't mean that we can't break down, but we're just not. And as I stated yesterday, and I'm just going to just review, there's nothing warm and fuzzy about this chart. 12's pointing down, 22's pointing down, 55's pointing down. That doesn't mean you can't bounce up into these, which would be a dramatic move for a lot of these names, and certainly names that we would be paying attention to. So please keep that in mind. Now, if you take a moment and just look at how this is playing out, we've reset this. Let's go through it. Let's do it this way and just clean it all off. And you just kind of look at how your day played out. You know, it's the same soup reheated. The one thing we always like to do is when you have economic data, even though I don't think jobless claims is that big, you just want to mark those levels. And then you want to see how you're acting at those levels. And candidly, that low there from that 830, that was our nemesis all day on the Nasdaq. Now, with the ES, that was our demarcation line. So they are levels that we really need to pay attention to. Now, tomorrow you're going to get the same thing. You're going to want to pay attention to it. Dollar's starting to look a little tired. Not like we're going to see a major change, but this was a massive run since July, and we're looking a little sleepy up here. For the first time, we have the 8 sweeping down. The 5 is becoming resistance. The 5 is yellow. The 3 is in green. These are SMAs, and you can see how that's acting. Something worth noting that we do look like we're a little tired, and these are all become levels of resistance versus support once it flips. I'm not suggesting that we're going to fall off a cliff here. What I'm suggesting is this. I'm suggesting that you might come back down, you start testing 105, 105.5, and then we can kind of see if we hold in there or not. Now, if you start looking at the 10-year, you can see how we're acting right here, that 471. I still think 528 may be on the menu. That does not mean you don't drop a little bit first before rallying back up. Of course you can do that, and that's definitely something that we're going to have to pay attention to. But the VIX gave us over 20 yesterday, and so far that VIX does not look like it's going to go much higher. So we're going to have to see what happens with non-farm payrolls tomorrow. There are a ton of names to go through, and I think a couple of these you still might want to watch tomorrow, so we're going to cover them. And then we should probably talk about some of the leaders and what's going on out there. So for example, if you take a look at Tesla, we really didn't go anywhere today, but I think there's some important notions here that we're just want to be aware of. Number one, you have a doji. This could have easily given back 10 points today. There's no reason for it not to, unless you have what? Buyers. So you have net buyers on the day. You finished with a doji. It is what it is. This is the way the world works right now, and this is what we have. So we have to watch this tomorrow. But I think it's an important distinction. If you look at something as simplistic as these moving averages, and let's get rid of the 22 and the 12 just to clean this up, you have a couple things going for you here that I think are really important. Number one, your RSI is back over 50. That's a big deal to me, and I pay attention to it. Undercuts of 50, overcuts of 50, I pay attention to. They tend to work, at least as far as underperformance and outperformance. In other words, if you flip that 50, you tend to outperform when you move. If you're under that 50, you tend to underperform. Just something as simplistic as that can work. And then you always have the 55. You can use a 50, you can use whatever you like. I use a 55. Once I flip that and I start closing over it, you want to pay attention to that, especially if it's been like 2-3 weeks. You were up here, and then we're just riding this DTL, which we can all see, downward trend line, and you're trying to flip. Here's that abandoned baby pattern where you had the reversal, and you can see how you're acting, and you're still making these what? Higher lows constantly, but we also still have this pattern. The larger pattern on the weekly, I mean, it has not gone away. You're still there, and it's still an issue, but that gets us up to that 280 level, and I think that's really worth paying attention to. Now, NVIDIA, they're out there talking about they're trying to find a way to ramp up production even more with all their demand. I think it's pretty interesting that you're back to the 55. Now, whether or not you flip that 55 or you do not flip it, again, I trade what's in front of me. I can speculate on where I think the stock is going. That's not how I'm going to trade. I think if we were going to break, maybe we would have already. And maybe this is the control bar. Maybe we're setting up to pull back a little bit before giving it another attempt to break through. But I'm just not getting and seeing that volume and excitement. I'm seeing selling into the strength. Now, that could just be because it's non-farm payrolls, but that's what we're seeing right now. So we really want to watch this tomorrow and watch how it plays because they're going to go after the big guys. But you're seeing better movement in some of these names like SMCI, for example, where all these pullbacks are being bought. Let's get rid of that level. I had a bunch of people playing this in the community today, and you started to flip. Now you're back over the control bar, or you're sure as heck trying to. The high of the control bar is 289. You're over the open. So you're pretty much getting there. You're over the peak, which is great. You held the 55. And when I point out these 55s, I'll tell you why it's so important right now. Now, if you watch Saturday's video, or if you're new, we start Saturday and then we just walk through the week so that you can follow along with us. But if you look at these levels, so in other words, this is S5FI. Stocks above the 50-day moving average. When you get to 90, you minimally have a pullback of around 18. The majority of time, candidly, once you hit 90, you have some kind of reverse back down to this level. It's usually an 18 reading. Sometimes it gets a little goofy like it's doing right now, and it shoots over on an extreme level, and you can see that. But what this is telling you is that that's a percentage. So well, it's telling you that only 10% of all stocks in the S&P are above their 50-day moving average. So do you want to own the best names or do you want to own the worst names? So the easiest way to run a scan is to look for stocks in the S&P that are above the 50-day, or just look for what stocks are above the 50-day. If they are, I use a 55, you use what you're comfortable with. What's important about this is when I start running my scans, if I'm above 55, I want to pay attention to this, and I want to be real clear about this. I was even showing the guys today in the private community. JP Morgan has a piece where they're all over this, showing it to their institutional clients. 2 days ago, Goldman's showing it to their clients. This particular one, this S5FI 50-day, this is what the institutions look at. Now, the question that you're going to ask is, why do they care about this one? Again, all these videos, if you're new, they're all linked together, and they're linked together for a reason. But just remember this one thing that we went over a while ago. If you do remember, great. If you don't, just a real quick refresher. When I look at moving averages, and I look at the 55, all my moving averages are demarcation lines. And what I mean by that is that tells me who's involved. So the 12 has meaning, the 22 has meaning, the 55 has meaning, the 200 has meaning to me. If I look at the 55, that's where institutional investors are showing whether or not they have interest or don't have interest. Just like retail is lemmings, institutions are lemmings. You have the outliers. They all have different kinds of asset allocations and classes and methodologies, but they're just like lemmings. So if you're starting to get over a 50 or a 55, which is what I use, that just means that what they're doing is saying, oh, so-and-so is buying this, I got to get involved. I mean, you want a real clear indication of this, go and take a look at Google. So after you held the 55 here, just disclosure, I have a position in Google right now, but after you held the 55 in here, after Ackman went on TV and did his little media tour, where he did a couple podcasts, which I would suggest that you watch, and also was on CNBC, which I would suggest that you watch. After he did that, what happened? All you saw was Google go higher. Why? It held the 55. It's above, on a relative strength basis, it's above 90% of all stocks out there. You don't need a relative strength scan, guys. You can just do exactly what I'm showing you how to do, and it'll work. And it's probably a lot more accurate, candidly. So if you take a look at this, and now you're going higher, I mean, it's pretty common sense that we held, and then all of a sudden there are net buyers because of what he's doing. Now, of course, you have people talking about the spot. You start running through these guys. Look at how Meta is fighting theirs. Now, I don't want to get too into this. We'll get more into it on Saturday, but hopefully you get what I'm putting down. There's too many names I really want to cover, and we know we have to be aware of the non-farm payrolls. But there's some really big moves out there, and the one thing I got asked a lot about in the community today was, how did I know that this was going to get bad? And I want to be real clear about this. I thought that this would sell off. I had no idea of the magnitude this was going to sell off. So obviously we did very well with this as a short today. Some people did options. It doesn't really matter to me if you did options or stock. You should do what you're comfortable with when we talk about this. And the people that are in the room know ahead of time. And I'll show you the timestamps in a minute. I'd rather show the timestamps when I say that we're doing things, just so you can see. And we didn't go off of, I didn't even need that. All I needed to do was a 1. Now, the big news here was they were going to do a secondary. But the secondary they're doing is what? The secondary they're doing is going to be based upon bonds. Now, that's more dangerous than just doing a secondary, and I'm going to explain why in a moment. But all we were looking for was the rally, the break, sideways, and then we entered. Now, this is the notes from the room that you can see going on right here. I'm not going to get into all of them. There's a couple here that we will talk about because I think you should be watching them tomorrow. This RIVN you should certainly watch tomorrow. You can see the timestamp right there, 9:32. And what's important about this is not just the timestamp, but when we started the day, you can see already before the bell, well, the bell's right here, but we were talking about it beforehand, RIVN will have constant selling and pressure all day. That's what we were talking about. And we were talking about it with a couple names, but for a moment, we're going to just focus on RIVN. Why? Why was I saying that, and how did I know that? I knew that because they were doing a convertible offering. And this is going to boil down to the same thing. This is going to boil down to macro, fundamental, and technical. And what I mean by that is we always talk about our stool and our legs of our stool. We always talk about this, and there's a reason for it. This was not a macro move on why RIVN dropped. There is a fundamental rule on why RIVN dropped. It has nothing to do with a technical chart. If somebody's posting a technical chart today and they're coming out like some kind of technical guru, stop following them because they have absolutely no idea what they're talking about. This did not drop because of a technical pattern. There is nothing technical about this that would have told you that this was going to do this. This dropped because they issued a convertible. That's why it dropped, and that's how you know that it was going to continue to drop. So I'm going to explain this very quickly, and if you like the explanation and you want more explanation, comment below, and then maybe I can work it into Saturday. If this is enough, comment it's enough, and then we can kind of go from there. When you have a convertible bond will be issued. They will come out and say, we're going to do a convertible. That bond gets issued. Once that bond gets issued, we're just going to say, let's do it this way. Once that bond gets issued, okay, it's at a set price. That set price will be 100. Now, with that is going to come a percentage, meaning you're going to get a percentage coupon. Now, that percentage coupon, let me see if I can get a little mark there, and that's our percent. Now, with that percentage coupon, it could be 7%. I won't show you my childlike handwriting, but you get it. And also, one of the things could be 5%, depends on what they have to do. But it also comes with a convertible price, okay? So you're going to get a price here, and that price, well, we can do it this way. There you go. There you go. There's your price for P. That price is why this is dropping. So this is dropping because of price. So when you get a convertible bond, you get a couple things with that. First thing you get is right here. You get a percentage while you're waiting to convert the bond. Well, if you know that you're in line to get this convert, say you're going to get $50 million worth of that convert. You start shorting, even though you're not supposed to, they do anyway. You start shorting the stock. Because what you know is that you know you're going to be at a discount. So if you know you're going to be at a discount, you just start shorting the stock. That's why it didn't really matter to me. All we wanted to do was find a way into the trade and let the trade work. Now, the other side of this is once you're in there, other people like myself that are traders that know this, that traded on the institutional side, we all know this. So it gives us an edge. Not everybody's going to be aware of this. So what it means is, I know that I'm not getting this convertible. I don't want this convertible, but I know that you're going to put pressure on this all day long. Now, that's the quick 2-minute answer of this. But what this also tells us, and what you must understand, let's clean all that off. What you must also understand here is these people that are on the desk that are trying to put this convert together, they're going to places like Citadel and calling them and saying, well, how much will you take? And they'll say, well, we'll take 10 at, 5.5%. But we want the convert price to be 19. And someone will say, I'm taking 15, but I want the price to be 4%. I'll do it at 17. And then they put this package together and they come up with something by going to their largest clients. Now, do you think for a moment that that information gets out on the street, that they start telling their friends what's going on? Remember, it's just like George Carlin said, it's a big club, you're not invited. So people will look at this technically and try to figure out why the heck did this start selling out at the end of the day? Very easily could have leaked what the pricing was. Could just be something as simplistic as institutions just decided to start selling at the end of the day. Either way, this is why it worked. It did not work off a technical pattern. You could have acted off a technical pattern today, but it worked off that convert. And that convert is more deadly, in my opinion, than a secondary. And I think that's pretty clear with today's action. You should watch this tomorrow. Once this prices, it'll be like this for a little bit longer, and then it'll find a base. It will usually trade very close to what that conversion price is. because this is going to be highly dilutive. So that's something to pay attention to. CLX was another one we did today. We did quite well with this. I would watch this tomorrow, and I would watch to see if you gap fill on the way up. So they were hacked. The hack was worse than they thought. We shorted it off the open. We had a really nice trade on it. It was a very simple trade. I'll just walk you through it. But you want to watch this one tomorrow. You definitely want to pay attention to this tomorrow. And really what you want to do with these kinds of names, you can just see the action. I didn't like the wicks. I wound up getting out early, right around 24. A lot of people stayed in it. They did better. I didn't want to be in one of these things with the wicks today. I just didn't want to do it. Why am I saying to look at this? Well, I thought this was kind of interesting at the end of the day, and that's why I'm saying that you might want to watch this one tomorrow. Watch this. Watch what happens when you got above VWAP, under VWAP, and then started to left. Well, into the end of the day, all you did was left. So you might have a group of people out there that want to own Clorox, and they're looking out a little bit longer term and saying, you know what, if I look out a year, this is probably a really good place to buy it. They'll figure out their stuff. We've sold down so much already. I don't mind waiting for them to figure out how to turn it around. And consistently, you will see things like that in the value names. I don't know that we're going to roll. That's a pretty big wick. If I was a short-term trader, I'd be looking at flipping that doji and maybe saying, okay, we can get the 132, 133, something like that. So you might want to look at the quick trade on the other side there. That might be something. Either way, that would be on my radar. MRTX, this had news today. I just want to walk you through this because this is a really easy way to trade. We had some people got in there a little early. Some people actually got in on this bar, which is funny. I did not get in on that bar. But what we were doing here is you're trying to figure out the best way to get in this. And this is why I want to show this, because there's a real simple way to do this, to figure out how to get in this and how to stay in it. You open up and everyone will say buy that bar. You can, but you don't know where all the players are. The easiest thing for you to do with names like this is drop a VWAP on it. And you just might want to remember that. So if you ever have something gap up on you, you just drop a VWAP on it, okay? It's pretty easy to do that. I bought like off the open when it happened, and I did not want to add until I got a signal. This was my signal today. And once it did that, I added, and we did quite nicely. So I'll just put this here. You can just see that this actually goes to people's phones or their desktop apps so they get notifications. But what you can see here is you just see that I just stated, hey, put a little alert out there, I'm in, and I started here. And all I was waiting for was the indication, which is right here. And then all we're doing is, as we're going higher, as it's going higher, you're just pulling money out left and right, and then you're pulling more money out. Now, what this does is it just puts you in a better position so that you get to see how these things play out. You don't want to be in a position where you're up here and then you have to panic because, oh, I don't know if it's going to hold or not. Instead, you just sell into these areas, and it's a lot easier to do that. So at one point, I think we were up 8, pulling money out. Now, whether or not you're in this or not, that's up to you. But the rumor that's out there is that they are in talks to be acquired. Candidly, the rumor's from Bloomberg. So when you see something like that, you want to pay attention to it. I have no idea where that buyout would be. The way that I look at it, candidly, is they have this big drug debut. This is candidly where something bad must have gone for that drug. So you have to think that you're at least going to be offered something close to where the drug looked promising. That's just a back of envelope way to look at it. I really have no clue. Comment below if you understand or think where this company would get acquired at and why. But these companies have a lot of money that are sitting on the sidelines right now. So this is something. But those 3 names I would not rule out. I would watch very carefully what's going on in the market. I would specifically watch how we're seeing that rotation that we talked about on Saturday. Look at the stocks just holding in here perfectly. Look at energy. Now you're trying to hold an energy, but they're selling energy. They're buying the stocks, and they're selling other names. Now the whole reason Pepsi was dropping today, the whole reason that you had Pepsi dropping today, very different kind of story. You can see that at the end of the day, you even had more selling. That's always something that you should be paying attention to, that, those last half hour to 20 minutes, and you just kind of see how it just got worse. It certainly didn't get better for them. It just really started to implode. Now, the reason for this could be several factors. They're talking about volumes being light because of these new drugs. To me, when I see selling like this, that's pretty indiscriminate. Now, you could look at these and say, well, they were all like that today. They really weren't to some extent. Like, this was down $1. So Bud's down $1. Pepsi's falling off a cliff. That is a significant move, and one that you need to pay attention to. Even if you looked at Coke, you had the same kind of similar move on Coke, But Pepsi, for whatever reason, that is really just indiscriminate selling, just get me out at any price. And you start to see it flow over here, and I'm watching this one tomorrow as well. This is not a one-day event, in my opinion. This is somebody that wants out for some reason, and I'm not really sure what that reason is. Maybe it's what they're saying, maybe it's this drug, and that's why they want out. But when I start seeing this kind of movement where they have to get out all of a sudden, that usually means some kind of liquidation. That is a massive reversal. Institutions don't one day buy and then one day sell unless something's changed. And this just looks to me like we're seeing something that looks like some kind of liquidation or margin call. That's it.